Thank you for watching my video today on Money Madness. My name is Blair. Please like, subscribe, and comment. And help me to get the word out to as many people as possible. Maybe one day I could be a big YouTube star. You never know. That's not why I'm doing it. I'm doing it just to reach as many people as I can and help people with money. You know, we all need help with money, myself included. And that's what I'm all about. So, I wanted to talk today about a subject which maybe I would assume that most people would just know, but probably a lot of people don't know. And that is just the standard deductions on your paycheck. So, of course, I'm in America, and this is going to apply to America specifically, but other places in the world might have a similar setup. So you have a job and you get paid hourly or salary, or you get paid commission or bonuses or tips or however you get paid. If you are let's say if you are an employee, not if you're self-employed, but if you're an employee and you work for someone, then there are basically 4 types of deductions that are going to be on your paycheck. So you make your gross pay. Your gross pay is the full amount of pay that you get. So if you get $15 an hour, 40 hours a week, then that's $600 a week gross. So let's go with the first, let's go through the 4 deductions real quick. So we have taxes, which are federal taxes, and I'm in Texas, so we don't have state taxes. But most states do in America. So you would also have your state tax, and you might have a local tax too, county or city as well. I hope not, but you might. And so that's the first deduction is federal, state, and local income taxes. The second deduction is retirement contributions. So you have, let's go with the second one is FICA, which is the Federal Insurance Contributions Act. And what that is Social Security and Medicare. So if you are an employee, then it's going to be 7.65%. And of course, Social Security is capped. So there comes a time if you make too much money, you don't have to pay that tax anymore. But for most of us, our full wage is taxed at 7.65 for FICA or Social Security and Medicare. And then the employer also pays 7.65. So it's 15.3 total. So that's the second one is FICA or payroll tax or Social Security and Medicare. The third one is insurance coverages. So health insurance, dental insurance, vision insurance, things like that. And unless you work for a company, and it's becoming rare, where they cover the whole amount of the insurance premium. I mean, I don't know of any place that does that. There might be. And I hope you have a job with one of them if you can find it. But most of us have to pay, the employer pays for example, health insurance is very, very expensive in America. And so the employer normally they pay most of the premium for you and whatever family members you want to cover. Well, maybe not as much for your family members, but for you. And then you pay a certain percentage of the health insurance premium in that example. So insurance coverages would be the third type of deduction from your paycheck. And then the fourth is your retirement plan. Normally that's a defined contribution plan, which means you are contributing towards it. And those normally are one of 2 things. It's most commonly, if you work for a profit-making company in the USA, it's a 401k. And a lot of times they have a match. So the employer will, if you put in, for example, the first 3%, they'll match 3%. So you're actually getting 6% in your 401k for your retirement when you're at least 59 and a half or older. And if you have like a 403b, that's like normally school systems, nonprofits, government entities, places like that. But they're very similar. It's either under a tax deferred, where you put the money in pre-tax, it lowers your taxable income, your federal taxable income, and then you take it out and pay tax later, or it's a Roth classification where you pay the full tax now on whatever money you make. You put the money in, and then when you take it out, at least on the portion that you contribute will be Roth. If the match portion is always going to be tax deferred or taxable when you take it out, but the part that you put in is going to be Roth, which will be tax free when you take it out. So that's just down and dirty. Just that's kind of how paychecks are. And you might have a job where you don't have access to any insurance coverage or any retirement plan. I hope that's not the case, but sometimes we have jobs that don't really provide us any benefits. And so in that case, you would have your federal tax and your FICA tax on your paycheck. But these are the most common deductions on a paycheck in the good old USA. All right. Thank you for watching my video today, and God bless. Hope everyone has a good day, and I'll see you at the next video.